Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore. Vishnu, great to have you on the show as always.
My pleasure, Brian. Thank you for inviting me. Always good to be here.
Now, Vishnu, let's take a look at markets across the region before we get your sagely advice. Now, we've got Bursa Malaysia trading at 1,587.02. It's up 0.28%. SGX is at 3,060.71. It's up 0.19%. The Nikkei is at 27,752.43. It's down 1.18%. Shanghai Composite is at 3,526.09. It's up 1.02%. The Hang Seng is at 28,137.09. It's up 0.39%. ASX 200 is at 7,039.2, it's up 0.36%. Rounding off the numbers, we've got the Kospi, which is at 3,129.5. It's down 0.76%. Now, Vishnu, markets are mixed across the region. Tell me why.
I think for starters, they had a bit of an advantage insofar that the U.S. markets closed up on Friday, but that was really a case of a perversion of the Goldilocks scenario, where the weak retail sales numbers in the U.S. Assuaged concerns about U.S. Treasury yields going higher and the Fed, maybe having to move to tighten sooner. So it's really the assurance that the policy accommodation remain in place that's bolstered markets. But I think in Asia, it's a lot more mixed, because even as we may get some reprieve from global financial conditions, the COVID conditions onshore and in most places in ASEAN are not looking terribly upbeat. We've had new infections just rolling off, especially with the new strains, so on and so forth. So I think markets are trading very carefully. They are quite happy to take the advantage where they're given, but it is not unbridled optimism, it is just opportunism. So that's the mood that markets are in right now, given the amount of uncertainties around this. And to top it all off, we've got geopolitics that got a little bit more heightened in the Middle East. Whilst I don't think anyone is pricing in a direct impact in Asia just yet, these are the types of risks I think investors have learned to be cautious about and not be complacent.
Okay, and I'm going to talk to you about the COVID risk, because we've got a 3% down in Taiwan. Singapore, while the markets are not affected, Singapore also, like Taiwan, seem to have COVID under control, well managed. That's had a resurgence. How is that going to play into these markets? I mean, the whole global recovery story was premised on recovery, that we have actually got this under control. Obviously, we don't.
Well, I think we have a choice where we choose between the devil and the deep blue sea. So either A, you get a situation where Asia takes quite a bit of a knock and a lot more interruption, and hence interim divergence with the US widening. And that brings about some of the policy dissonance risks. If indeed US policy is expected to normalize sooner, that could unsettle Asian markets. So that's one end of bad. Then we have another end of bad, which is where maybe this is a global thing, where we may get a resurgence, touch wood, globally, and that hampers entire global recovery story, and that also is not good. So either way, it doesn't look very good. The only hope is that this resurgence is contained within a fairly short amount of time with the very targeted restrictions, and so it doesn't allow for huge divergences or economic scarring. So that's the best case, and a very narrow, precarious path to where Asia can come out of this, not too badly affected from expectations and forecasts before, but in all likelihood, the full recovery is going to be deferred by quite a bit. The only question is whether it diminishes the amplitude of the recovery because of the number of interruptions and the kind of adverse impact on cash flow for service sectors in ASEAN particularly.
Now, the other thing that you mentioned, Vishnu, is geopolitics playing into the risk factors now. It seems to be very much something that is not discounted in Asian markets yet, but Do you see that happening? What would be the trigger points to raise concerns in Asian markets?
We probably will take this in levels. I mean, one of the things we want to see is whether there is a greater divergence between the UN Council and the US in terms of their positioning and their balance of support behind one country or another. That division in itself can create a little bit of tensions in the markets. Risk can start coming off. And if indeed there is a ceasefire call and a violation of that that leads to, I think, somewhat more heated and harsher words, these things could start to then get priced in Asia. I think Asia would probably need to see somewhat more agitation in the rhetoric and a wider divergence between the UN and the US before some of these risks get priced in. But for now, I think it's still viewed as a risk that's somewhat more remote, geographically more than in terms of chances. And also there's some consolation that one of the impact, which could be a disruption to oil prices, that consolation there is that there's a lot of spare capacity that can be restarted. So some of the economic impacts of, consequences of that in the region, at least in the short term, can be mitigated.
Now, Vishnu, looking ahead this week, what are key data points and events that as investors we should be watching out for that will move markets?
It's going to go a minute at a time. So FOMC minutes first, and then you've got RBA minutes. The trouble is a lot of these minutes would be a little backward looking, but the thing is that markets will see what they want to see. And I think what they'll see here is that the Fed's dovish inclinations being validated by some of the data misses. Equally, they'll also see the RBA's cautious positioning that favors the policy stimulus to remain in place while recovery broadens, also being somewhat justified. So in against that backdrop, I think what you get is USD yields being fairly muted. Markets will be more or less in a consolidation mode because whilst the financial conditions are muted, you do have risk factors that are swirling on different dimensions, whether it is with regards to the pandemic, geopolitics, or in fact, political/policy misses and missteps. So those are probably the kind of things that markets will be looking at. Today, China data is something that's worth digesting, but really no getting carried away with headline numbers, because what markets really want to assess is whether the momentum in recovery can be sustained. And even if today's data point is somewhat upbeat, I think markets will be a lot more circumspect given the risks ahead.
But Vishnu, I just got to ask you about the retail sales number from China, because the expectations for by a Reuters poll was an average of 24.9% increase. We only got a 17.7% increase. So is the market discounting that, as you said, looking at the trend line and not looking at the monthly number as such?
Well, the two things that markets will have to do now. First, they need to take away the fact that the base effect, right? And the base effect was ultimately very flattering because retail sales was the one that took the biggest hit. So there is a suggestion there that even after months of sequential recovery in the supply side of China's economy, the industry, so on and so forth, consumers are not quite out there in forced spending. But I think markets may give this a little bit of the benefit of the doubt because they're not sure where the sales may be captured. It may be captured in terms of online spending and some other sources where it's not being picked up. The real question for markets will remain as to whether China can, on a medium-term strategic basis, really lean a little bit more on the domestic consumption engine as per their dual circulation policy. In the near term, I think there's a bit of reservation, quite rightly so, given that many of the risks that China is facing hasn't gone away. The tensions with US, COVID in itself, as well as the uncertainty around policy, whether credit will be tightened or not. So with all this in place, it is then, I think, the data, more than being a source of alarm, it is a point of reflection for policymakers in China, perhaps, to think about how to bring the economy forward.
Now, Vishnu, it's always a pleasure having you on the show.
My pleasure, sir.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations. please like and subscribe to our Facebook and LinkedIn pages. Thanks a lot for tuning in.